Welcome to Confessions of a CEO, powered by RG. My name is Carl Swansbury and I'm delighted today to be spending some time with Alastair Brown, CEO of Shard Credit Partners. Alastair founded Shard Credit Partners a number of years ago. Shard Credit Partners is a direct lending fund predominantly providing debt and transformational capital to SMEs based in the UK. I've worked with Alastair on dozens of transactions over the years, both MBOs, MBIs, and helping businesses fund transformational growth, both organically and inorganically. But I'm really looking forward to spending some time today with Alastair to really getting under the skin of what Alastair's why is, why he went from big corporate institution to setting up a small direct lending fund, and indeed what his aspirations and ambitions are as an individual for the months ahead. For sure, I think today's going to be interesting and fascinating, and I think we're all in for a real treat. Alastair, first of all, just wanted to say I'm absolutely delighted to get to spend a bit of time with you without a board, without a management team present. Because we do speak often, but rarely is it just you and I having a conversation like this.
Yeah.
So to kick things off, I'd be really fascinated just to understand a little bit about, I guess, your upbringing and what maybe encouraged you to want to go into education, specifically university.
Okay. Well, that's going back quite far in history at this stage, since I recently turned 50. So I was never an academic at school. I mean, I was always a middling C grade average from the beginning until literally the end of my secondary education, finishing, my A levels literally B, C, D with the B in art, which if you're, a serious academic doesn't count apparently. So I had actually sort of, during my sort of later years of secondary school, I mean, I've always been very interested in art, drawing, painting, creative activities, and sort of, during my later school years, it became, my dream really to go to art college. So after I left, after my A-levels, aged 18, I had the opportunity of going and working in Edinburgh for Richard DeMarco, who's a very famous arts impresario. He discovered Joseph Beuys, was very involved in the avant-garde movement in Scotland, and I spent 3 months in that gallery in Edinburgh, surrounded by absolutely fascinating artists, thespians, and all sorts of actors, and that's really where I fell in love with Edinburgh, right? So that in a sort of bizarre twist of fate, what then happened was, so I decided to take a gap year, which the first part of was spending this time in Edinburgh working in this gallery, and got an application into the Leith School of Art, which was on a personal recommendation from Richard DeMarco, and it's a very good art school. Got accepted to do a foundation, and then went travelling for the rest of my gap year. Came back and found to my horror that all the funding had fallen through from Hampshire Council. They wouldn't fund me to do a what do you call it? Sort of, it's like an induction year. I can't remember the word, but you do a sort of a 1 year. It's a foundation course, right? So you do a 1 year foundation before you go on to do, art college proper as a bachelor's. And so what I then did in August 1997, no, what am I talking about? 1991 was to open the Times or whatever the newspaper was during clearing, and to figure out how could I get into Edinburgh University with my 3 C's, including a B in art. And I found geology, and I was like, okay, well, I did geography A-level, so I'm sure there's something similar in there. And I talked my way into the Faculty of Geology at Edinburgh University with the full intention of then transferring across to the art school. This is my cunning plan. And somehow I never left, and I fell in love with geology, ended up getting a first from Edinburgh in geology, and was offered a PhD in deep focus earthquakes at Edinburgh, but had had enough of the student life and not earning any money, and so took the decision then to go down to London and head into the city.
And why back to London at that point, given, as you say, you loved Edinburgh, so why London?
I think 4 years as it is, in Edinburgh, Scottish University's 4 years bachelor's, focuses the mind on earning money. And, I think thoughts turn to, what I was going to do for a career. I had been developing an interest in finance and the city and trading, during my sort of later years at university, because they do, the careers service does try to push you to think of something to do for a career, because you're spending all this time and money doing a degree. I got a job. I'll tell you what I did. I had a friend who was working on the life. Well, he wasn't working on the life trading floor, but he was one of the guys on the end of the phone in the dealing room, and he offered to take me down to the life trading floor. This must have been in, 1995, when it was really at its heyday. And I just fell in love with it. I just thought, this is fascinating. I have to be involved in this.
And why finance and trading? Because as you say, your degree wouldn't suggest for a second you were remotely interested or relevant for finance and trading. So other than that introduction to the possibility of going into trading, what else was it that encouraged you toward that career initially?
So geology is all about using multiple, deep, extensive data sets to try to construct analysis to make conclusions and actually ultimately make predictions about where you can find oil or gold or diamonds. So it's geology is actually a very quantitative degree. The way that it was taught at Edinburgh certainly was. And my focus at Edinburgh University in geology in my last 2 years of my degree became very much, I specialised in metamorphic petrology, structural geology, and experimental geochemistry. So I had sort of lurched from being somebody that was going to go to art college to, in the space of 2 or 3 years, being somebody who was just absolutely buried themselves in the kind of the data and the detail of these complicated equations and formulae of how you calculate things in the natural world to make predictions about where you might find resources. So that sort of fascination, I've become much more maths focused, much more scientific in my interests. I've just been guided by, I guess, what I find interesting to spend my time thinking about. And I do spend all of my time now buried in Excel spreadsheets, and I have my calculator to hand all the time, because I now spend my time creating innovative acquisition structures and debt financing structures. That's where it's ended up.
Which we'll definitely come on to in a moment. But just let me ask, so your first ever paid role within finance, could you just tell me a bit more about how that came about and what the actual job entailed, Alastair?
Yeah, so this was actually one of my favourite ever jobs, and the people that I worked with at this time, I'm still in touch with a couple of them today. Just the the most generous, kind-hearted, but also hilariously funny guys I've ever worked with. And this was in 1997, 98. So talking about the city in a different time. When we're all young, right at the start of our careers. So my first job in the city was actually with Citibank in cash stock options. So things like scrip dividends, proxy voting, anything to do with basically global custody for equity nominee accounts for big fund managers would hold all of their huge holdings in the FTSE 100 and 250 stocks with Citibank or JP Morgan or another custodian. and all of those, the ownership of those shares bears responsibility for, voting on corporate actions, doing the scrip dividends, all this kind of stuff, and it needs administering, and it's actually quite a technical job. So that was me cutting my teeth, in the city, and it was a very entertaining, this is my first proper job, and I learned a lot, about working in an office environment, and I'm forever grateful to all of those people who helped train me. But after a year and a half, I think it was clear, it was obvious to me, I just wasn't really, getting the kind of the challenge that I was really hankering after. So I then went back and did a master's in finance.
And was that full-time masters? Was that part-time?
Yeah.
It was full-time. So you went from being employed, back to classroom.
Yeah.
Yep.
So it's the Master of Science in International Securities Investment and Banking at the ISMA Centre. I think it's now the ICMA Centre at Reading University, and the ICMA is the International Capital Markets Association. So at the time it was quite an innovative. Classroom-based learning. So it was classroom-based and trading floor-based. So I think it was the only Masters in Finance program at a university that was run from dealing rooms. So we do a sort of a we'd be doing a module on bond pricing, for instance, and we'd learn about it in the lecture theatre, go away and read about it, and then we'd have to actually create a pricing spreadsheet to then come in, on our little sort of hard drive data. I mean, it's also obsolete now, obviously, but stick your sort of data card in the machine under the desk, and that would be your spreadsheet that you would trade against everyone else in the room. And if anyone got it wrong, they got absolutely hosed. and we were trading for course credit, so it wasn't like a joke. Like actually, your ability to trade all this stuff accurately.
Went toward your masters, presumably.
Yeah, went towards the masters. Yeah, it was a very intense 9 months. So it's full time. We did more than 30 exams in, econometrics, advanced econometrics, portfolio management theory, fixed income, all the sort of key kind of elements, I suppose, that you would probably find in an MBA finance module.
And what do you think it was at that time that inspired you to go back to do a master's? Bearing in mind, as you say, in London, having stacks of fun, earning a wage.
Yeah.
What was it that sort of forced you to acknowledge that doing a master's might give you a bigger opportunity down the track?
Everybody's got a degree these days. If you want to stand out, you've got to have 2 degrees, right? Basically. But I think also I just got kind of fed up of trying to explain to people or convince people in interview that of the mathematical problem-solving nature of geology. Because most people, when you say, "Oh, I studied geology," they're like, "Oh, is that digging up bones or?" Is that, excavating
So people
churches?
couldn't see the relevance to the career you're pursuing?
No.
Right, okay.
So I kind of needed to, go back and, get that. But also, actually, I mean, I learned a lot of very useful information, during that degree that's, proven to be useful, in my career going forward.
And obviously I know that from that point to now, you've worked in different environments, very large international financial institutions, to where you are now. So I'd love to just understand what it was that encouraged you to join Shard Credit Partners where you are now as CEO. What was the catalyst to accepting this role that you're in now?
Well, of course, I didn't really accept a role. I mean, Greg and I and Jose created the business out of nothing. So, it was. This.
How did that opportunity sort of come about? Because of course there'll have been, no doubt, lots of jigsaw pieces that had to align to make that opportunity become real.
Yeah, look, when we set out to set up a credit fund, none of us had any experience of doing deals in the lower mid-market. We didn't have a great deal of experience of doing non-sponsored debt transactions, although I have to caveat that by saying immediately prior to setting up Shard Credit Partners, Greg and I, of course, set up Mediobanca London corporate and leveraged finance business. So, you know, that was really the first time that we had spent any, you know, significant time sourcing, originating, negotiating and executing, and then managing non-sponsored loan transactions. So, you know, during our time at Mediobanca, we, you know, bearing in mind this was 2008 to 2012, when, you know, RBS, HBOS, Barclays, Lloyds all had significant problems and were largely shut for corporate lending during much of that period. It was a fortuitous time for us to be building a business, and so we were able to win new customers for the bank, such as BHP Billiton, Centrica, Premier Oil, Chemring, Fuller's, JD Wetherspoon. It was a really good portfolio of top quality FTSE 100 and 250 borrowers. But other than that, you know, we'd never done lower mid-market direct lending, primarily targeting the sponsorless kind of subset. We've also spent a disproportionate amount of time backing primary MBOs with management teams. So I think the one thing that we really both enjoyed from our time at Mediobanca was dealing directly with the management teams.
Right. Yeah.
If you spend your time doing private equity deals, you don't really get that close to management except under very controlled circumstances. So, you know, working for the likes of APAC, CVC, TPG, KKR, etc., which, you know, was most of me and Greg's former career in leveraged finance. You know, you're sort of chaperoned, you get a very contrived management meeting, and then you're sort of sent off again. So, you know, we spent quite a lot of time working with the management teams, particularly Premier Oil and Fuller's, who, you know, were smaller, so FTSE 250, and, you know, there was much more of an engagement on strategic financing issues, buying, you know, potential acquisitions. So, you know, we kind of enjoyed that. So I think in formulating the strategy at Shard Credit Partners, I think we tried to take the best bits from the corporate direct lending that we did at Mediobanca, so working closely with management teams to help them achieve, you know, financial goals, you know, through financing and lending, but also with the, you know, significant sort of experience and know-how and you know, understanding of how private equity works. We sort of brought that together in the deals that we're doing with management teams. You know, most of the management teams in our direct lending fund one, they're first-time MBO candidates. They've never done an MBO before. We're sort of hand-holding them through the process, and then working with them very closely to help build the business and drive growth afterwards.
And obviously a lot of people watching the podcast might not fully understand what lower mid-market means. Yeah. So could you just sort of set out exactly what a typical MBO transaction has looked like that you have supported, Alastair? And of course, some of the things that you typically see in these primary MBO opportunities that you are funding?
Yeah. So I think the starting point for all of our MBOs has got to be that there's a business which has demonstrably recurring or very strongly repeating revenues. All of our borrowers are in some way best in class in the UK. You know, they're the best example of, you know, companies in their industry. Or they're completely unique and there's nobody else doing what they're doing.
Right.
Or they're doing what they're doing in a way that nobody else is, and they've got quite a wide moat around them that gives them protection. Yeah. And therefore they can, you know, they can maintain meaningful EBITDA margins. So, you know, the average EBITDA margin in our portfolio is above 20%, which is, you know, for an SME is quite high. So there's got to be an underlying business which is absolutely robust, where we have strong confidence through doing due diligence and modelling that they're going to be able to repay the debt that we're putting on the business to facilitate the MBO or the buy and build acquisition strategy that's at hand. Overlaid on top of that, we're looking for businesses that are doing between 1 and 3 million of EBITDA at the point of our transaction, where our 5 to 15 million pounds of investment can be the transformational growth capital that accelerates the growth to get to 5 to 10 million of EBITDA within a 2 to 3 year period. So a typical exit for us would be probably a secondary sale to private equity based on an EBITDA of 5 to 10 million. That is a very productive way to spend 3 years in a company, putting our investors' capital to work. It generates a very good return for the fund. It generates, it's transformational for the business and the management team. We would hope that during the sort of 3 years or 3 to 5 years that we're involved with management, it should be a very good training ground for them to then go on to private equity. So we obviously demand of all of our borrowers regular monthly reporting, and that's monthly. Well, it's month, year to date, and LTM P&L, balance sheet, cash flow. We get all of this information every month. We update the covenant models, and typically we'll meet all of our management teams either monthly or at least quarterly. And so that introducing the management teams for the first time, usually, to that kind of discipline where they're responsible for reporting and what have you to an external third party like Shard Credit Partners, is a good basic training ground before they get into private equity.
I guess it's all about professionalising the business, isn't it? Creating governance and actually, as you say, encouraging management to appreciate that they are held to account by a third party.
Yeah.
Because as you say, in mid-market PE, Alastair, that will be assumed. Obviously, the management team of a £2 million EBITDA business will be just night and day, somewhat different to the management team of a large FTSE 250 business. It would be fascinating just to understand how you went from working with larger corporates to SMEs. Who often can be, far more passionate about their business, sometimes a little more difficult as a consequence to manage, and of course, very emotional at times. So just talk me through some of the sort of psychological differences with the people you now back versus maybe people you are used to investing in.
So when you're doing much bigger leverage financings at a bank, as I have been for most of my previous career, your relationship is actually with the private equity professionals, right?
Yes.
So you're one step removed from the company, and it's almost exclusively all about the reporting, the covenants, and then working through covenant waivers or issues, in the portfolio. So you don't really, you don't really get in the discussion about strategy with the management team. All of those discussions take place behind closed doors with the private equity firms. So I actually had very little direct exposure to those kinds of discussions, before setting up Shard Credit Partners. But obviously, what we have done is set up financing businesses before. So, setting up Mediabankers London. I mean, we were two of the founding MDs of the Mediabanker London office, and so that was actually, Greg and I consider that to really be us cutting our teeth in setting up a business from scratch. I mean, obviously it helped that they had a balance sheet, that we could draw on to fund our deals, but there was nobody really helping us with building our strategy in London, working with the private equity firms in London and the corporates that we ended up lending to. So, that was really the start of our entrepreneurial path that's led to where we are now. I'd say also that obviously setting up Shard Credit Partners from scratch, was a very difficult thing to do. It's 3.5 years from setting up the business to having a first close on Direct Lending Fund 1 at 90 million. And you learn a lot in that 3.5 years. You learn a lot about strategy. You learn a lot about, interpersonal relationships and how you can work with your team to try and get a result that, is to most people actually impossible. I mean, most of these ventures actually fail for a good reason, as it's extremely hard to do. And it requires perseverance, and a lot of, you've got to have a lot of meetings and, you've got to have a lot of conviction in what you're doing to convince others to invest in the fund. So, I think by the time we closed the fund in October 2017 and were ready to then start investing it, we'd already been on quite a long journey.
That's right.
Since we were last really working in a regular day job as leveraged finance bankers at, in my case, Barclays Capital, before that Merrill Lynch, before that CIBC World Markets. So we sort of had a 10-year kind of journey, I suppose, into Shard Credit Partners. So, and there's been a lot of learning on the job. Our first investment was a 10 million commitment to SKS Business Services to back Sanjay Swarup in the buy and build strategy that he developed already before our involvement. And that was a journey as much as it was, for him, for us, right? So, but that was a very successful buy and build strategy. There were lots of bumps along the way. We had to, have a lot of very difficult discussions along the way, as you do with these kinds of strategies. But ultimately, what we achieved with SKS was to take it from a business doing 4.5 million of revenue and 1 million of EBITDA in May 18 to a business doing 5 million of EBITDA and over 20 million of revenues, as it was when we exited in December last year through a refinancing by inflection. And during that period, we really drew on our private equity experience of working with all the great private equity firms. And so we were very encouraging of SKS in looking at its buy and build strategy to try and consider, let's try and move you from being London and the South East based to being nationwide, because, if you're positioning yourself to be attractive to private equity or with a refinancing in mind in a few years' time, let's think about what will make you look more attractive. And so, we completed acquisitions. The biggest acquisition that we completed for SKS was actually in Peterlee, in Durham. So
that was Bailey Group.
Bailey Group, yeah. So I mean that was a big one. But we also completed acquisitions in Manchester, elsewhere in the northeast and the northwest, Birmingham, Wolverhampton, the south coast. SKS, by the time we exited, was in most of the regions of the UK, with a very significant customer base. Well over 18,000 customers, I think. So.
And to date, how many businesses in total has Shard Credit Partners through Fund 1 invested in, Alastair?
So Fund 1 is now fully invested, with our 11th investment completed last November. Mm-hmm.
Understand. And talk to me just a little bit about something you said earlier, which was obviously at Mediobanca, you had spent a lot of time doing what you always knew. Mm. Within a business you thoroughly enjoyed, and of course you set up the London business for Mediobanca. So what was the one reason why you decided to set up Shard Credit Partners? What was the one catalyst, if you like, that forced you to do something that you hadn't done before, working with a particular type and size of business that you hadn't really lended to before?
I don't think there was one catalyst. I think it was just an evolution and a coming together of a lot of different strands that
Right, okay.
Ultimately, Greg and I distinctly remember the conversation. We were in the back of a taxi on the way back to the airport from the JP Morgan European Leveraged Finance Conference in Paris in 2011. And we both agreed there and then that we were going to leave banking and set up a fund because, Mediobanca had, like all the other European banks, largely avoided the beginning and the middle of the credit crisis, but got very much caught by the end of the credit crisis, prompted really by the Greek debt crisis in 2011-12. And so cost of funding, became an issue. It wasn't really working to be able to fund deals again or anymore, certainly corporate deals, which are quite tightly priced. And private equity was not the flavour of the month because there were a number of private equity deals that had been done elsewhere in the bank that were causing people a headache. I think the best example of which was the Ferretti LBO. So it sort of became quite difficult to do deals. I think also, Greg and I spent 5 years at Mediobanca, so we've taken it from, we did 3.6 billion euros worth of deals across 29 transactions, 15 corporate and 14 private equity, during that 5-year period. And so I think we sort of felt like we'd kind of done everything that we were going to be able to do there, and it was time to move on. And I think personally, I come from a family that has that has never spent any time with. I'm the first person to have a corporate career, really. All of my family have been small business owners, small business operators, still are, and so I think there's always been that sort of entrepreneurial draw, nagging in the back of my mind. Are you actually, looking in the mirror, asking myself, are you actually going to sail all the way through your career only working for a big corporate? And that began to bother me, as I got older. And so I think it was a itch that needed scratching. Just, can I be an entrepreneur? Can I actually do this?
And just to ask, sorry, that's fascinating. So now that you look back fondly, do you wonder what you could have achieved maybe were you to have left corporate sooner, or is that never a question you ask yourself?
I'm very happy looking back with the career that I've had in investment banks, in leveraged finance. Some of the deals I've been involved in are, landmark transactions, never to be repeated, and I've had some amazing experiences. An example that pops into my mind is, when I was at Merrill Lynch, I was in the deal team supporting Philip Green and his hostile P2P for Marks and Spencer. And we together with Goldman Sachs underwrote, I think, a 14 billion sterling acquisition bridge facility.
Wow.
And then there was this 6-month period where Stuart Rose was brought in to kind of defend putting together this intricate poison pill, which is basically a mirror image of the deal structure that we created and underwritten with this bridge. And ultimately the deal didn't happen, but being able to work on deals like that was absolutely fascinating. And everything that I've learned that I pour into these overly complicated lower mid-market deal structures that you're very familiar with comes from those days, right? It's doing those bigger, much more complicated deals that's given me that kind of repertoire of structures and solutions and ways around problems that I think is sort of second nature when you're supporting these big private equity firms or people like Philip Green in these really important deals. So no, I don't. I had a very fulfilling investment banking career, and I'm glad for all of it. but the last 10 years has been completely different.
And obviously you mentioned that when you set up Shard Credit Partners, a lot of your first 2-3 years was actually getting into a position where you could invest by raising your Fund 1. Once you had the ability to invest, what would you say is the hardest single thing that you had to grapple with? Because having a fund to invest is one thing, I guess deploying it successfully, generating return is something else. So what would you say is the one single thing that you and Greg found the most challenging once you had fundraised?
Well,
other than backing good horses, which I appreciate is always a challenging conundrum.
The obvious shortcoming, and I think this is probably obvious to all of our investors as well, was a complete lack of any network or
relevant network, I guess.
Relevant network. So and so the first thing that Greg and I did after we launched the fund in October 2017, was literally for the first 6 months, we were on trains, every other day to Manchester, Newcastle, Liverpool, Reading, Oxford, Bath, anywhere where we thought, we should go and knock on doors, have lunch with corporate finance advisors and, start trying to shake the trees.
Who could introduce funding opportunities to you that you could then support, Understand. And was that something that you enjoyed? I mean, that sounds like a lot of coffee and a lot of shoe leather worn, Alastair.
Yeah, but it's that is if you're going to spend your time as a financier, that is what a portion of your time is spent developing and nurturing relationships, and so that's the same whether it's private equity or whether it's middle market non-sponsored lending or whether it's trade finance, whatever finance you're doing, you need networks and relationships, introducer networks. So no, I mean, it's part of the job, and we very much enjoy that.
Understand. There's a lot that I could ask you, but I'm conscious of our time together today, Alastair. So just 2 final questions. My penultimate one being just to understand a little bit more about your personal why. So obviously you've explained a lot about some of the decisions you've made and why. And you've had a phenomenally successful career, and I know that as a friend of yours and someone who has the pleasure of working with you often on transactions. But let me ask, what's your why? Why do you every day dust yourself down at 5 a.m. to go into business for what can be often very challenging 13, 14, 15-hour days? Why?
The bit that I undoubtedly enjoy the most is working with management teams to help them achieve their goals, build their businesses, problem solving. I have a never-ending list of problems that I'm involved in helping solve. I'm not always the problem.
That's right.
And we've been on, we've been on a number of very exciting journeys with our current portfolio. I mean, I just to give a few examples. When we first met Rachel Withers, who's CEO and co-founder of BW Legal in Leeds, she was looking. We'd been introduced to Rachel to do I think a £6 million refinancing over a period of days of discussion. The conversation evolved into us backing her to do a £13.5 million primary MBO for her to buy out her co-founder. And at the time, the business was doing sort of 3.5 million of EBITDA. It was already very much, looked the way that it does today. But the journey that we've been on with Rachel over the last, nearly 4 years is tremendous. So I'd say, the business is doing, treble the EBITDA that it was doing only 4 years ago. And what the opportunity set in front of BW Legal currently is probably the most exciting that it's ever been during the time that we've been invested in BW Legal. And some of my sort of highlights really from that journey are, the year after we did the MBO, BW Legal was added to the stock exchange's list of 1,000 companies to inspire Britain. which was a great vote of confidence in the company and Rachel. The year after, JP Morgan Private Bank published for the first time ever their list of the top 200 female-powered businesses, and Rachel was ranked number 3.
Wow.
Just below the number 1 was the woman who runs Starling Bank.
Yep.
Number 2 is the woman who runs and set up PensionBee. Yep. So that was quite a big vote of confidence, not just in Rachel and BW Legal, but actually in our investment process.
Sure.
And we've got similar sort of other stories of success from a lot of our other portfolio that we're working with currently. So there are some great growth stories in the portfolio that I think should be evident now, but I think will start to become even more exciting as we approach some more exits. So we have a decent number of companies in the portfolio that have been on that journey of sub 3 million of EBITDA when we started, and then now approaching kind of 8 to 10. And so it's we've proven the model. It definitely works. Hopefully our investors agree with that. They'll definitely agree with it when we get some more exits, I hope.
And I think final question for today from me, Alastair. Obviously, you explained that your first fund is fully invested.
Yeah.
It would be fascinating just to understand a bit more about perhaps your ambition for Shard Credit Partners beyond your first fund, which of course is now fully invested, and therefore what the next year or two might have in store.
Yeah. So I'm a big believer in diversifying business. So we don't want to be solely dependent on the direct lending strategy, although it is a very well refined strategy and it's proven. We last year launched, or a couple of years ago, launched a tech venture debt strategy, which has proven very popular with some investors. And so that is another strategy that will continue to run alongside direct lending. More recently, end of last year, earlier this year, we launched a global trade finance strategy, and that's very exciting. The way that we're doing it, we've got a team that's joined us that's very experienced, very knowledgeable in the sector, been doing it for decades, and we've already now executed. We're just about to execute our 8th transaction in trade finance, and so I think the strategy for Shard Credit Partners is to build an interesting portfolio of strategies that all are in some way focused on lending to UK SMEs. Okay. So they're all focusing on UK SMEs, where we can take a senior secured first ranking position, but generate equity-like returns. So we're targeting 15 to 20% IRR and 2 times cash on cash during each investment. And so, we want to be able to offer investors a sort of, a portfolio of different opportunities with different fund vintages. So that's diversifying away from just running direct lending is currently top of mind, but also we need to raise direct lending fund 2. We're also not totally wedded to funds as a way of. I mean, our job really is to act as the intermediary between investors who want exposure to private credit investments, generate with a particular senior secured but equity-like return profile. It doesn't have to come in a fund format. So one project that I've been working on with the team at Shard Capital over recent months is a structured note program. So we've actually already issued the first tranche of notes. So we've issued 5-year fixed income notes at sort of 5.5% annual coupon to investors that can only buy fixed income product, but which like the kind of exposure that we can give them in direct lending, venture debt and trade finance. and we then take that money and invest it. So actually the first primary MBO that we completed outside of Direct Lending Fund 1 was our recent MBO of Digitech Resourcing Limited. And that's been funded but through issuance under the structured note programme. Right. And in fact, the trade finance strategy that we've launched is also being funded at the moment through the structured note programme. So it's about trying to offer products to as many investors as possible, and as many different ways of investing to get exposure to UK low and mid-market direct lending, venture debt or trade finance as possible.
So I think it sounds like, in answer to my question around what will the next few months have in store, it sounds like lots of interesting strategies. It sounds like you're going to continue to fully focus, Alastair, on supporting high growth, ambitious SMEs, scale and go through change and ownership transactions. I guess my last question, I did say that my previous question was last, but this is my last. If there's anyone who works in a corporate setting, be it prof services, be it in financing, and they are, like you, aware of an itch that they want to scratch when it comes to maybe setting up a business or being able to encourage someone to back them to do something similar, what would your advice be to them? So almost your advice to your former self many years ago.
Just do it. It's messy, it's unpredictable, you can't really plan it. You just have to leap and just learn to fly along before you hit the ground.
That's right.
I can't put it any simpler than that, really. There are no safety nets available. If you're trying to do something entrepreneurial and you're looking for a safety net, you know, you got to question. I have to question.
That sounds like employment, doesn't it?
Well, exactly. You know, I think what you're really after is a side hustle. I think people call it these days. You just have to leap. You have to believe absolutely in yourself, in your strategy, and the team around you. You know, it helps that the three co-founders of Shard Credit Partners have worked together on and off since 1999. So, you know, we've all got a very sort of similar way of thinking when it comes to credit, client service, professionalism, all that sort of stuff.
Yeah, and you can't really underestimate the importance of that, i.e. having around the board table people you trust, respect, and who have complementary but different skills. You know, we've not really talked about, you know, Jose and Greg, but for sure, I guess that a successful business relies on a number of individuals, and I think that's a really important point, right?
Yeah.
Alastair, massive thanks. I've thoroughly enjoyed our conversation. We'll definitely be getting you back, if it's okay by you, on a future podcast. But for now, thank you so much for your insights.
Great. Thank you for your time.
It's been a real pleasure spending some time with Alastair Brown, CEO of Shard Credit Partners today. For sure, Alastair is a very experienced, very charming, very intellectual and very engaging individual. And for sure, I now have a far better appreciation of why Alastair decided to leave Mediobanca, a big corporate, to set up a direct lending fund in the form of Shard Credit Partners. For sure, if you would like to see more, not only when it comes to my podcast today with Alastair, but similar podcasts with other CEOs, chairmen and NEDs, please do absolutely take a look at all social media channels for links to this and other podcasts. And for sure, I promise you in the future, we'll have Alastair Brown back for a future podcast. But for now, my name is Carl Swansbury. This has been Confessions of a CEO powered by RG, and we hope to see you soon.